Hey, Bulls and Bears, we are back. We are back with another dose of economic reality. It is Monday, February 13th, 2023. We've got quite a bit to get into today. Yesterday was our Super Bowl edition. I only talked briefly, though, about the Super Bowl, but I told you in that video how I predicted that the Chiefs would win. And not that it was rigged, but there's certain things that I look at to try to figure out who's going to win. So I broke it down in that video if you're interested. I don't bet on sports, nothing like that. All right, but let's talk about the markets. The markets rallied today pretty good. Let's go ahead and look at the numbers here. And we're almost to closing. We've got S&P up by 0.85%, Dow Jones 0.8%, NASDAQ 1.4%. That was the big winner today. Russell 2000 up almost 1%. So the market's obviously showing no fear of the financial turmoil that's unfolding in the real world. Now, Wall Street and Main Street, of course, they're probably the most separated that they've ever been in history, as far as I can see. Now, yesterday I pointed out a fact, and in my observations here, this is a fact. If we take away the number of people being laid off, the number of people quitting their jobs, the number of people getting fired, if we take all that away from the jobs added number, I think we would be about break even, maybe even negative. Now, some of you down in comments said, ha ha ha, that's ridiculous. But, think what you want, but it's a fact. The numbers for jobs added do not subtract, they do not take away the people being laid off, the people losing their job for other reasons besides being laid off, being fired. Also, think about this. If you have someone that voluntarily quits one job to go take on another job, they'll still count the new job as a job added, but they won't subtract the job that the person left. You see how this works? All right, so if you're still believing the official numbers that are coming down from for example, one example would be the Bureau of Labor Statistics, the BLS, right? If you're still believing those numbers, you probably still believe in the Easter Bunny, the Tooth Fairy, Santa Claus, etc. All right, but let's get into some other news today. I always like to reply to some of the more, kind of ridiculous comments that I get on this channel. All right, and maybe I shouldn't focus on that. Maybe I should just focus on the good comments, the positive feedback, and how people have been helped with the information that we put out here, which I really appreciate the good comments. And I try to reply to as many comments as I can, down in each video. All right, but tomorrow is a big day. Tomorrow, February 14th, not because it's Valentine's Day. That's like partially a big day because of that. But the announcement here for January CPI, the Consumer Price Index. Now, we know that that number is also very, very flawed. We know that the real inflation is much, much higher than is being reported. But if we look at that number compared to previous numbers from previous months, we could still kind of get a gauge on what's happening with prices. And not just that, the markets look at this and the markets use this data to make decisions. Now, today, with stocks being up the way they were, all major indexes in the green, obviously the markets are not concerned about inflation. And here's one of the big scams that I think that most of you hopefully realize by now. When inflation shows a lower rate of growth versus a previous month, the markets love that. It's reported as a positive thing. Inflation's coming down. It doesn't mean inflation's coming down. It just means that it's going up less quickly, right? You see what I'm saying? Right. So when we get to a point where inflation is lower than it was 1 year ago, then that's a good thing. That is, it could be worse, but it's still not lower prices. You see what I'm saying? And even these month to month numbers, we look at the month before and then compare it to the current month. And if it's lower than the previous month, then the market's eat it up. It's good news. Rah, rah, rah. Everything's great. The market rallies. But then we're still higher, way higher than we were the previous year. You see what I'm saying here? So a lot of this news that the market looks at is pretty much nonsense and ridiculous to even think about it like this. All right, but this is the world we live in, so we have to report it. But my question to you, what do you think the number is going to be? Is it going to be worse than the previous month? Or is it going to be about the same? Or is it going to be less? And if it is lower than the previous month, are you noticing any difference? Are you noticing anything being cheaper, anything more affordable? Here's an example here of how things really aren't getting much better. The price of natural gas basically crashed. But here in San Diego, at least, we're not seeing lower utility bills. All right, let's bring up a chart here. This is a 1-year chart for natural gas. We see the big drop ever since the end of last year, but at the peak, we're at about $9, about $10 actually, closer to $10. Now we're at $2.42. So I would define that as a crash. It's down about 75% from the peak, but we're not seeing utility prices being slashed for people's gas bills, even people that use natural gas for their heat, or I should say their company uses natural gas for their heat, right? And that seems to be pretty typical. When prices go up, there's no hesitation to raise prices. And then they'll use the higher prices to justify the higher cost. But then when prices go down, we really don't see much of a decrease like we did on the upside. Now, since the beginning of the year, I've made it pretty clear that it's hard to find a day that goes by without a big layoff announcement. And today is no different. Twilio, you may not be familiar with them, but they're in the tech industry. They do cloud computing or cloud data, I believe. And it's not a small company. There's about 9,000 employees. 1,500 people being laid off. That's about 17% of their total workforce. All right, and this is after a previous announcement from Twilio. I believe it was last fall. So another day, another pretty big layoff number. And again, they're not going to subtract these from the jobs added number. All right, so we have to keep this in mind when we look at the broader economy to know that things are not headed in the right direction. So ultimately, this house of cards is going to break apart and fall apart. I think there's going to be certain news that comes out where we're going to wake up and the markets are going to be down by thousands of points. That's my opinion here. And that's why I'm not that heavily in on the stock market at this point. If we see a huge sell-off like we saw in 2020, I might get back in like I did on the stocks that I have now. I've got some dividend-paying stocks that I continue to hold, but it's a not a very big percent of my overall portfolio. I'd have to say less than 10% of my portfolio. And even my 401k, I've got invested in a fund that pays a steady return. It's not a very big return because rates are still pretty low, but it is beginning to pay more since rates are being increased, right? So we're starting to see a little bit of relief for people that save with higher rates on these money market funds. If you have your 401k, if you look at your 401k provider, you likely have an option, or actually many options, between stock funds and indexes, and also what's the equivalent to a money market or a cash account, but it earns interest. It's based on bonds, right? So with bond yields going higher, you can see a little more on your 401k or on your savings. Now, in order to find out what's going on in the real world, one of the things we do besides looking at our own circle of friends and family, etc., and ask people, how things are going, is we look at these surveys, right? There's a recent survey out of the New York Fed, and it has to do with income expectations. And the question is, do you expect to make more money or less money in the next year, or about the same? And that index or that survey, the results plunged the most on record. That was a New York Fed survey, and it plunged the most on record. So obviously, people are still feeling the pinch with this cost of living and inflation. And if things were actually getting better, if these CPI numbers dropping really were helping people or noticeably making it easier for people to get by, then one, you would see debt not skyrocket like we are. The debt is increasing at a record pace right now. In these surveys that we see these every few weeks. Another survey, people expect their income to be lower next year. And what this does is this looks at people's inflation, or it has people gauge what their income is based on inflation or the cost of living. And it was a huge plunge. So that's what's happening on Main Street. People are feeling the pinch. They're not seeing much relief on the horizon. And regardless of what number they throw at us tomorrow, I think that we can see the direction that things are headed. And the consumer being the driver of the U.S. economy, this is very, very dangerous. It's a very, very dangerous time that we're headed into. And they can point to the stock market and talk about how we had this big day today. And maybe tomorrow, if the number is lower than the previous month, they'll push up the stock market and make people feel hurrah, hurrah, like everything's going good. But really, we know what's on the horizon, and we all need to prepare for that. So we're going to make it a shorter one today. Thanks, everybody, for being here. Hope everyone's having a good Monday so far. Please come back to this channel for more economic financial news. And what do you think about these inflation numbers? That Fed survey? What do you think about the other big layoff that we talked about today? And the stock market surging on this supposedly good news. What do you think about that? Thanks, everybody, for being here. Big love. Keep stacking. Bye for now. Peace.